Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hey guys, what's going on, everybody? So, let's get into the markets right now. NASDAQ had a bit of a V-shaped recovery yesterday, and if we just take a look at our daily time frame, and just traded down into this order block here. So if it does go higher, we could possibly expect 25.5. ES very similar, right? Even though yesterday closed bearish, it's still contesting with this down close candle here, and still creating higher lows, higher highs. So I guess we'll kind of see where we want to go today. Overnight, bit of sloppy price action. We traded down to this bullish fair value gap, traded to about 1 standard deviation of the Asian range, and right now the daily candle is bullish right now. So we'll kind of monitor this to see if it gets that run higher. Because it's the last day of the week, it could just chop around. We still have the Asian range high that hasn't been taken out. And, if we're looking at just trend line liquidity, this could just be a retest prior to going higher. I'm not thinking short here whatsoever. But there is opportunity to short intraday, as you guys saw yesterday, as well as overnight. But I think the higher risk reward is skewed to the upside. Now, dollar definitely ran a lot higher than I thought it was going to. We talked about this bullish fair value up here, and then we had all this liquidity up here. But now that it's trading into this fair value gap, I don't necessarily want to see it go higher from here. I kind of want to see it roll over. And what I was looking at actually was this candle here that doesn't have a wick at the open. So we have a gap, gapped up on Monday, Sunday night, gapped up, created a candle that doesn't have a wick on the lower end of it. So we have this weekly candle, right, that doesn't have a wick here. So, if we fail to get through this wick, right, we just have all this here. Maybe we just retest the highs here, 50% of this wick before it starts rolling over again. Now, I know, with the rate cuts and everything, the government doesn't really want to see the dollar continue pushing higher. That's not what they want to see. They want to have a weak dollar. So, with Thursday already punching high, I don't want to see us take Thursday's high, and actually I want to see this roll over. But we'll kind of wait and see, what the market gives us. I haven't been trading Forex just because I haven't had a very clear indication of where the market's trying to go. If I wanted to be long, I should have been long back here. As it retraced down into this discount level of this Fibonacci. All right, so we have this impulse leg here. This is just really a retracement that panned out over the course of, a week. So we have, 4, 5, 6 days before it really started turning around. And then we hit our first fib extension. But now that we're trading into this, daily fair value gap. I have a very hard time trying to be long here, and I actually want to see it roll over. But yeah, with NQ, I would not want to pick a top here. The market is just continuously going higher, right? So we had this retrace here into this bullish fair value gap, and since then it's really just been bullish. Even though there are days that are turning around, taking out daily lows, the following day, right? This day takes out a daily low into the fair value gap, but the following day just trades higher. This day takes out the high and then the low. After we take out the daily low, then it just trades higher. All right, so this market is still bullish. Fridays can be tricky because I don't really anticipate new highs on the week being created on Friday, but that's not to say that I can't do it, right? So we have this inverted fair value gap that we just inverted on the last hourly close. Now, if it stays above this level, it stays above the midnight open, I actually want to see it continue higher. I'm seeing anything else really that I want to discuss? Not so much, I don't think. ES, we could take a look at on the lower time frames. All right, we have this fair value gap here that we traded down to from yesterday overnight. Traded down there, got a strong rejection. And it does feel like, we're just taking out this liquidity down here to go higher. So if it does go higher, we have this high, these highs here, which are equal highs. So I like marking this out and just putting like liquidity here. And then we also have these highs here. That is low resistance. Gold. I know you guys love trading gold. Gold's been on quite a tear. So be interesting to see if this actually does continue higher. Yesterday we saw a pretty big pullback. So we're gonna have to, kind of contest with this up close candle now. And right now it is trading into this bearish fair value gap. So I would say it's very dicey for longs at the moment. And if it does go lower, maybe back towards this low, maybe back towards the weekly open. Talk about dollar yen. Dollar yen probably ripped higher. See, this is a very difficult market to trade. Me personally, I don't think I would have taken any positions in here because, look at all this weekly range here. Unless you really spot it out, I would say the buy side liquidity. Let's say you saw this buy side liquidity here and you wanted to see it rated this week. Well, we've already traded above that level. But because the weekly is already expanded higher, I personally would not try and continue chasing this market higher, right? Because the next weekly candle could open up, maybe trade lower before you try and get long again. But again, I don't necessarily want to see dollar continue higher, right? Maybe this run here is just into this monthly fair value gap before going lower. But overall, if we just look at our monthly time frame, this is all just stuck in a range. Okay, when they started cutting rates back in 21, right after COVID, this is when it really got that move from the interest rate differential, because the Bank of Japan was like the only major government that wasn't raising rates. All right, so that differential just kept growing. Right, dollars cutting rates. Bank of Japan basically stayed at zero. So we can watch to see if, this rate on liquidity here, right, we have our London low here. This is like London lunch. We got a nice flush of that, but now we're back above it. So I would possibly look at this as our swing failure pattern. Swing failure pattern is really just turtle soup, liquidity rate, same thing. The closure back above the low, however, kind of gives you indication that it doesn't want to go lower. Right. So when we have a swing low like this, instead of when I was learning how to trade turtle soups or liquidity raids, I would try and go long as soon as we took out the low, right? Or as soon as we took out the high. But if you wait for the closure back above the swing low, at least now you have a really good place to put your stop loss, right? Your stop loss goes below the low that was printed prior to taking out this one, right? And maybe you're just targeting this swing high here, right? That's a 2-to-1. CRT, listen, I'm usually not one to start beef, but candlesticks have been around much longer than Romeo has, all right? These markets have not changed. A lot of these people just like to rename things for marketing purposes. Okay, candlesticks, if I bring it up, I think it was like the 1800s or something, maybe earlier. 18th century. Okay, 1710 by a rice trader. Do you think CRT was around in 1710? Okay. Candlesticks have been around since the 1700s, guys. Do you really think any of this has changed? The candlestick is just an open, low, high, and close. All right. None of that has changed. All right. Romeo didn't just come in and all of a sudden just manipulate the markets and create a new concept. All right. These candlesticks have been around before everybody. Anybody in this chat, these markets have been moving around the same exact way since the 1700s. Because all it is just a record of data. What was the price at the open? What was the price at the low? What was the price at the high? And what was the price at the close? So you have time and price. That's all it is. I'm an ICT trader, but I have a very hard time believing that ICT invented any of this stuff. That's just my 2 cents. Because these markets, again, have been around since, before you guys can recall, the 1700s, right? People were tracking the price of rice, right? A rice exchange, Osaka rice exchange, back in the 1700s. Right? Doji, hammer, engulfing. All this stuff has been around for a very, very long time. Should learn more about candlesticks? Yeah, I mean, basically, that's what we're trading. We're trading candlesticks. So, let's see. I think we have some news out today. Yeah, 10 a.m. we have prelim consumer sentiment. What's the bias for today? I'm bullish on index markets. I'm pretty flat on the dollar. I do want to be short on the dollar, but it just hasn't provided the opportunity I'm looking for. So, till then, just wait. All right, because if I look at the quarterly time frame, nothing has changed about this. All right, so even if it takes out this high into this quarterly fair value gap, I'm still watching to see where it closes in 2 months or almost 3 months. Right? Because what happens? What's your bias really on the dollar? Even if it goes higher and then gets a closure like this on the quarterly time frame. And when I look at the quarterly time frame, I'm still bearish on the dollar. And nothing is really going to change my mind on that until I see something that makes sense on the higher time frames. But it's going to take a lot for me to change my bias on this. So just because the dollar is going higher does not mean that I'm trying to be long on the dollar. Right? And I will not lie, Forex this year has been very difficult to trade. Unless you were in this, I mean, earlier this year, right? Q1 up through Q2, these markets were much easier to trade. Okay, because we had actual movement. All right, we had liquidity rates that were being respected, and trading into fair value gaps being respected. So we actually had structure behind us. But since like June, this market's really just been stuck in a range. So if I look at the price right now from October, it was this price back in June. Right? So has the market really gone anywhere since then? Yes, it has intraday and maybe on a short time frame. But overall, it hasn't really done much. Compared with some of these years where we had a lot going on. There's a lot going on back here. Right? There's a lot going on up here. But it's been in an extended range for a very long time. So if you're struggling right now as a Forex trader, or if you're just struggling in general, because I'll say NASDAQ hasn't been the easiest to trade either. It's been very whipsaw-like, and then when it runs, a lot of times it's not providing you the entry that you're looking for. Silver, I don't look at silver really. I recommend learning CRT. Learn candlesticks, guys. If you learn candlesticks, it's the same thing. All right. What qualifies a sure setup? Listen, nothing is sure in these markets. If you can frame a proper trade that aligns with your bias, and I was having this discussion with somebody that was, or somebody that managed me at the prop firm in Chicago. And he was saying, like, a lot of traders, when he was running his firm, a lot of traders had to grade their trades. And they often found that the best trades that they took were ones that they graded maybe a 6 or a 7 versus ones that they graded a 10. Because when you find trades that are a quote unquote sure thing, those are usually your biggest losers, right? And those are usually the losses. Because you're not accounting for the downside. You're not accounting for the fact that you could be wrong. Right? So when you're trading, you always are trying to anticipate, what do I do if the market doesn't go in my favor? Not just, let me put 5-10% of my account on one single trade, or let me put the full drawdown amount that I'm allowed at these prop firms on this one specific trade. To me, that doesn't make any sense whatsoever, right? Because there's always going to be a failure rate. Well, the thing with trading is that there's always going to be another opportunity also. So just because these markets are ripping without you does not mean you have to be in the trade all the time or in the markets all the time. I shared a very important tweet that I think you guys should take a look at. Just give me 1 second. Power of no trade days. I don't even know who this guy is, but when I saw it, I was like, this is exactly what guys should be practicing. Learning how to not trade is very difficult, okay? Because it builds discipline. The best traders prove discipline not when they buy, but when they don't. A flat day can be a sign of strength, not hesitation. All right, emotional resets. All right, if you feel FOMO and you find yourself taking way too many trades, it clears emotional residue, market clarity. When the market's choppy or extended, observation is more valuable than action. Pattern recognition. Pattern recognition to me is more so about your behavioral patterns. Like, what do you do when you take a stop out, right? What do you do when you hit a big win? Do you go back into the charts? Right? Do you go back into the market as soon as you get the win? And doing all of this, right? Psychological control, long-term edge, professional mindset. These are all very important in building discipline and sitting still in the markets. You don't always have to be in the market. All right. And let's say if this market jumps to 30K overnight, there's probably going to be another opportunity. Let's say if this thing is all the way up here tomorrow or next week, there's probably going to be another opportunity that sets up where maybe, you have another opportunity here, and then you're just positioning long, and you could frame a 1 to 2. Right? Does it really matter what price is at when you're taking that position? No, because the contract amount is still the same. So does it really matter if this market, jumps in value? It really doesn't. Same thing with euro. If you put a standard lot on, one standard lot is the same price. If you're trading one standard lot up here and you have a 20-point stop loss, it's the same as if you're trading it down here and have a 20-point stop loss. Right? Does it really matter what the market's trading at? It really doesn't. Place to trade with no stop loss. So I always have stop losses on my trades. Always. Otherwise, how are you framing proper risk to reward, right? Now, YM is probably the one asset today that looks a little funky because we don't have a lower wick. So take that for what you will. This market has just been in a channel going higher. But yeah, we'll wait and see. I'm probably not going to be here for the equity open. And today might just produce an inside day on NASDAQ. We'll see though. SFP is a swing failure. Basically just turtle soup, liquidity raid, whatever. Right, you have this swing low, right? And what constitutes a swing low is a 3 candle pattern that has a low, lower low, higher low. So that's your swing low. After we take it out, but then close back above it, that's a swing failure. All right, so you can go back, you can go through your charts and back test this, but if you wait for swing failure patterns, let's say you go long on the closure. Oops, that's not the right one. Let's say you go long on the closure, put your stop loss below the low that was created on the purge of that swing low, and just maybe target a 2 to 1, and go through your data, right, and study all of this. Let's say you want to be short on this day, right? Let me just try and I'm trying to find a good example. Here. This is the other day. Right? Instead of going long, or sorry, instead of going short as it's going up here because you don't know where to put your stop loss, let's say you're trying to go short as it's taking out the high. You don't know where to put your stop loss, really. You don't know how much higher it's going to go. But if you wait for the closure back below, that is your confirmation that this swing point is failing. Okay, so if you go, let's say you go short at the close of that candle, and you put your stop loss above the high. All right, maybe you're just going to target Asian range lows. Right, that's a 3.3 to 1 reward to risk just in one day, right? Just in a couple hours. Maybe you're looking at this swing low here, and you're waiting for the closure, right? So if as soon as we get the close, going long, putting your stop loss below where? The low that was created on the purge, right? That lowest low there. Maybe you're just going to target what? Previous day's high. Now you have to hold this trade overnight, but it eventually goes there. Did I take any trades this week? Yes, I did. And I'm basically at like a negative 1R. This week was very difficult for me. I'm not gonna lie. I honestly wanted to be short inside this bearish fair value gap, but the market had other plans. All right. It ripped to the highs, and then since then, I basically haven't really done much. How do I do an hour meditation? By sitting there. It's very difficult. You got to work your way up. All right. So when I just started getting into meditation, it's very hard to sit still for long periods of time. Well, you have to build up the tolerance to sitting still, not thinking about anything. Because when you're sitting still with yourself, your mind is going all over the place. How to overcome missing trades if you're watching the chart? Well, if you miss the trade, you know, just come back another day. These markets are always moving, and I never really, whenever I feel like I'm missing out on a market, it's usually when I'm not really trying to trade. Just try to end the week in green. Usually when you try and do that, you end up more in the red. Because you don't have the discipline to not take a trade. So let's say if you have a loss going into Friday. How many of you guys have dug yourself in a deeper hole going into the weekend? Let's say you're up on the week and you want more out of the markets. And instead of you being content with what you've made, you go back in on Friday and lose everything. And this is why trading is so difficult, because there's no right or wrong way about doing it. You have to kind of ask yourself, like, do I even want to take a trade today? Like, do I feel like I'm gonna execute properly? How do I decide what trades to scale in aggressively? Well, it really depends. If I have a very strong indication of where the daily's trying to go, that's usually when I'm scaling in aggressively. Like back here, when we traded down into this fair value gap here, I got long the next day. But when I don't have confidence, because today is Friday, like I have a very hard time thinking that it's going to make a new high on the week, then I typically will not do much or anticipate that we're going to make a new high on the week. Would I buy US 30 at the close of 4-hour bullish engulfing candle? Which 4-hour bullish engulfing candle? Because none of these are engulfing candles. For this to be an engulfing candle, it needs to take out the prior candle's low, which it did not. What's the difference between NAS 100 and NQ? I believe they're very, very similar. The prices are a little bit different, but the price action is very similar. Do I see liquidity in sessions, high and low? Yes, I do. Like right now, I'm looking at the run on the Asian low and the run on the London low. But again, because it's Friday, I don't know if it's going to get above these highs here. It's music, guys. Like, Thoughts on gold? I already went over gold. Right now, you're contesting with this up close candle here. We're trading down into a bullish fair value gap, but for the time being, all right, there's only 8 hours left on this weekly candle. How much higher do you think it's going to go on the week? It's already expanded. So any trade that you take right now opens you up to risk. Because all these other weeks, right, you're really trying to enter at or below the open if you're bullish. And if you're bearish, you're trying to enter at or above the open when you're, you're trying to get short. But right now, based on where we are in the range, does this, just based on a high time frame, where do you think this market is going to go? Like, is it going to go to the high or the low? Right now, it's like at 50% from where the low is created to where the weekly high is. So in 8 hours, I don't have a very strong indication that it's going to go either way. The high time frame indicator is PO3 by 2 degrees, PO3 plus. So it shows the daily candles on the low time frame. All right, so you can change these settings. Sometimes I'll put two of them. So if I put 2 of these up, second, I may have lost. So you can put an hourly up here. I don't know if you could do this with the free version. So you can have daily candles as well as hourly candles without having to be on that specific time frame. And probably have to change these offsets. All right, so you have the daily candles here and then the hourly candles here. What's an EC? Golfing candle? Talking about SPY? Not sure what we're looking at here. In Q4, high time frame? I still don't really understand the question, to be honest. So you should be scaling in based on new information in the market. Okay, you should not just be scaling in if it's going in your favor. Because you need to have a proper place to put the stop loss as it's going in your favor. Like, is there a new swing low? Is there a fair value gap that's being respected? So let's say you were long all the way back here. When can I scale into that trade? Well, I'm usually not going to adjust my stop loss too aggressively. But when it runs like this, I still don't have a great area to scale in. But let's say if you're swinging it to like 25,750. Let's just say your target's all the way up here. I probably wouldn't want to scale in until I get a pullback like this. Right? Because then I can move my stops up from here to this low now. And I can enter a new position. But it has to make sense. It's not just scale in whenever you feel confident about a trade. There has to be logic behind it. How do I sleep after taking a loss? Experience, I guess. Experience taking losses. Like, losses are not an easy thing to overcome. All right, because when you take losses, oftentimes you end up making a lot of bad mistakes afterwards. So again, it's a discipline, it's practice and discipline when you take a loss to honestly just get off the charts and do something else. If you can do that, or you should mark that down as a win in your book. Like when you're journaling, just say, I took a loss today and I was okay with it and I stepped away from the screens. And I didn't try and overtrade or revenge trade. Guys, I already talked about gold. I already talked about gold. We have this 4-hour fair value gap here, so until we get above that level, I would lean short on gold. But because this thing is in a major uptrend, I have a very hard time finding a target down here. Like, where is your target going to be? It's much easier when you're bullish to just target old highs because you have a very strong indication that it's going to go to new highs. Whereas if you're counter trend trading, and let's say I'm trying to target liquidity, where in this fair value gap do I target? Because that can be a very difficult thing to do. And I'm going to release a video on YouTube probably later today or tomorrow discussing this. But targeting external range liquidity is much easier than targeting internal range liquidity. Because you don't know where inside of the internal range the market is going to stop. So let's say if you wanted to be long on gold, where do I target? Do I target the high end of this fair value gap? Do I target this fair value gap up here? Because this is still internal. Right? Do I target the order block that's resting here or breaker that's here? Whereas if I am short, let's say I'm short biased, I can with more confidence put my take profit at the daily low and have a very strong opinion that it's going to go there. And it allows me to hold my trades longer when I'm targeting external range liquidity. So I tend never to target internal range liquidity unless it's like very obvious, which oftentimes markets are not, they're not that obvious. Sorry, guys, give me a second. So again, I would not be surprised if today closes an inside day on NQ. Yeah, usually if I have a stop loss, that's what I'm waiting for, because the stop loss is going to tell me if I'm wrong on the market or not. Now, again, I don't really trust these fair value gaps that are appearing here because I don't have a very strong feeling that it's going to go take the weekly high now. Right. In my opinion, maybe the weekly high is already printed and the risk to the downside is still there. So if it does roll over, right, there's liquidity that we can maybe target if it does go short. Swing failure is when it takes out a higher low and then fails to push lower. All right, so if you're bullish, this is not a market structure shift. That to me is not a market structure shift. When you get the closure back above that low, that's the failure. Right? It's just exactly what it says in the name. Swing failure. You have the swing point. It's basically failing to stay below that level. This here, even though it closed bullish, it's a failure because we failed to get above and stay above the high. Right now, this market is very sideways overnight. And with YM not having that lower wick, definitely makes me cautious of and trying to be long NQ. Because if this is going to be power of 3 on YM, right, it might just be going higher right now to go lower. And here, you know, maybe we're going to look at this as our bearish order block. But yeah, at the current moment, I would say it's hard to try and anticipate where the market's going to go today. I just have a feeling that, you know, after we took out the previous day's high here, right, failed. Which indicator? This is PO3 by 2 degrees. Traded up into this 15-minute fair value gap and is turning around so far. So we do have this bearish engulfing candle here, which, you know, it traded almost the wick, but if your stop loss was above the high, you'd be fine. Guys, I already talked about gold. I don't know. This is going to be very similar to what you see in spot or our fair value gap. Just watch this level. Not be overthinking what you're doing in the markets. All right. I should be able to look at a market and decipher what's going on in a very short period of time. And if you can't do that, then you're just lacking screen time and you're lacking understanding of the markets. So I try not to overanalyze what I'm trying to do. How do I develop patience? Honestly, looking at this tweet, learning how to do this, sitting still, is very important. Especially when you're in a trade, you have to watch that trade move to your target, right? And sometimes it takes a very long time to move towards your target. So, the way that this market is kind of rolling over right now, maybe we want to go back down to this low. Because ahead of the open, right, this candle's about to close in 12 minutes. Might get a bearish engulfing candle. So let's say if it closes bearish, my invalidation, at least for the day, would be above this high. Which I believe it should close as a bearish engulfing candle. This is just from an intraday standpoint. All right. Let's say if I wanted to get short on the close or on the retracement on the next on the open, this is where my stop loss would go, and maybe I want to target the previous day's low. Okay, that's a 3.5 to 1 risk to reward. Do I trade NQ before or after 9:30? Usually after, unless something really sets up that makes a whole lot of sense. Like if this sets up ahead of the open, I may just decide to go short just based on this one candle. But then my invalidation obviously goes above this swing high here. Well, not swing high, but the candle high. No, so like my weekly bias is already bullish, but it's the last day of the week, and usually it's TGIF. So just based on where we are, right, and the fact that we failed to close above this high here yesterday, maybe you want to lean short for the day. But if you wanted to be long, There was already opportunity to go long. That's part of timing your trades. Because you don't want to be the person that's positioning themselves on Monday or Tuesday and then holding it all the way through Friday. All right? You should be trying to exit your trade maybe on Thursday when it's above the high. Maybe you're trying to exit your trade above that high. All right? Otherwise, you're putting yourself at risk holding on to the trades for too long. Okay? Because markets, right? The longer you stay in positions, the more risk that you open yourself up to. You like how I'm still grounded? Maybe it's because I've gotten my teeth kicked in way too many times. Like, the markets have a way of humbling you, for sure. And I've seen way too many people talk about this. Tom Dante's talked about it. Lance Brystein have talked about this. Plenty of other people have talked about this. They've seen a lot of traders make a lot of money, and then they can't continue finding success in the market because their egos get inflated, and they're trying to do too much, and they just don't understand and protect the downside risks. So this market clearly had a hard time getting through this fair value gap. Like I was talking about when we first hopped on stream. You know, I had said I had a very hard feeling, or I had a very hard time thinking that I would go take the highs today because it's Friday, right? And I typically don't see markets create new weekly highs on Friday. In fact, I typically see markets retrace, and we are so far away from the weekly open that it could trade all the way down, back down to this low, and it would still probably close bullish on the week, right? Dollar index, not much going on really. But yeah, like, if we look at this weekly candle, why would you want to get long now? The candle's already expanded higher. We look at this weekly candle here. Why would you want to get long towards the latter half of the week? Usually there's a huge retracement. And if we go back to, what was it, July 28th? Right? So, like, let's say if you were long earlier in the week and you held this all the way through here, right? Up until the end of the month. If you're not taking something off by then, right, the end of the week, when was this? I just want to find out what day this was. Right? This is exactly what I'm talking about, right? Thursday. This is Friday. Yeah. So this is Thursday. Let's say you were long Monday, Tuesday, Wednesday, Thursday, and you're so greedy that you don't know how to take profits when the market might print the high of the week, right? And then something like this happens, and all of a sudden, give back all those gains. And let's say you're stopped all the way down here, and it goes against you like this, and you just keep holding it, and then it just keeps going against you. Right? So the, time of day and day of week factors are very important. So, and the reason why, again, I'm cautious of being long on NQ is because YM It looks very weak right now. And it feels like that this is just going to be power of 3, trading higher before going lower. All right, so we possibly look at this fair value gap as we're sitting in currently. Now, it could trade all the way up to this fair value gap. Let's say maybe it trades to this fair value gap on the open and then turns around. But you typically do not see too many daily candles that don't have a lower wick, right? I mean, look at all of these days. You find me a candle that doesn't have a wick on it. You know, I can keep going back further and further and further, but this one here, however, did not create the upper wick. But at some point, it does want to go back to that level. Right? But I would say, you know, let's say just this is kind of an anomaly where it doesn't print a upper wick on the day. Almost every other day, like if that's 1 out of 100 days, right? Does that really make a difference if you're trying to trade power of 3? Because I would possibly take this setup 9 times out of 10. If it's trading higher, you know, I'm trying to short it above the open. Right? Maybe I'm trying to short it above the open right now. Or wait for a rejection before I short it. But, you know, I'm taking that setup 9 times out of 10 just for the fact that I have a pretty high confidence that it will print a lower wick today. Bullish? It's not gapping lower. So it gapped lower, but to me, it's not bullish. Like when it gaps lower, I still want to see a lower wick printed. Like if it gaps lower and then prints a lower wick and then goes higher, all right, then maybe it makes sense. But the fact that this daily candle doesn't have a wick, you know, this low here becomes very susceptible to being ran out. So let's just say you're a short-term trader, and we were just talking about you know, that swing failure pattern. Let's just say you want to go short and put your stop above the high. What is the risk reward to that candle that doesn't have a wick? It's a 3R. Right, there's your trade for the day. You're done. So this is about to print a very strong bearish engulfing candle. So I'd say my bias for today is leaning more bearish than bullish. Even though I was bullish earlier in the week, the fact that the weekly candle's already expanded higher, I'm expecting to see that movement lower to close the week out. Just like we saw here. I want to just double check to see what it did last Friday. Yeah, see, look, last Friday, we took out the high from Thursday and then just completely died. And just like what I was talking about, you're waiting for that closure back below the high, and that's your swing failure. So here, right, you're not going short on any of these candles here. You're not trying to go short. You're trying to go short on a closure here. You get the closure, and not only that, it gives you an engulfing candle. This is at 6 a.m., so if you're not up, you kind of miss that move, or you have to wait for this retracement on the open. But here, if you shorted it, let's say you shorted it on the very next candle, if you're up at like 7 a.m., you put your stop loss here above the high, maybe you target Thursday's low, it's a 6R, right? Based on the same framework that I was just talking to you guys about. So here, if you wanted to just trade this engulfing candle, again, you don't want to see this high be taken out. But I'm probably only going to stay on for like another 15 minutes or so. You guys already have my thought process here. could still just close as an inside day, to be honest. It might not go take this previous day's low. Well, let's say even if the day closes bearish, well, maybe this run higher is losing steam. All right, so you have the hourly open. Maybe you wanted to short this based on a power of 3. And we'll see if the next candle closes lower. And if not, let's say if it goes to this here, that's your one trade for the day, and then you're done. But the way that I look at this right now is if it really wanted to go higher, it would have inverted this level and not closed back below it. To me, that doesn't really make sense. If you're trying to trade a fair value gap, right, or inverted fair value gap. Clean low resistance on what side, though? Because there's low resistance all the way down here, too. I would provide my analysis on all these markets, guys. If you want, just rewind it. I'm not going to keep repeating myself. I already went over my analysis on those markets. Got a 15-minute bearish fair value gap here. Oh boy. This week was not easy by any means, trading wise, though. I would say it was pretty difficult. Well, ICT concepts to start with. To be honest, liquidity raids, fair value gaps. What else? Honestly, just those two. If you can read liquidity raids and fair value gaps, that should be enough. No, I would not take a euro short. Just because I usually anticipate TGIF on Fridays, and if you go through your data, you can check how many times a market creates new lows or highs on the week on Friday. Very rare. So if you're a gambling person, then go right ahead. But I've lost too much money doing that on Fridays. And it's just from experience, guys. It's just losing money in the markets, doing things like what you're trying to do. It doesn't work long term. It just does not work long term for me. If you're in between two hourly fair value gaps, don't trade. You just don't trade. So if you're stuck between a bullish fair value gap and a bearish fair value gap, you just don't take a trade. Now, trading is more about discipline than it is about trying to understand where the markets are going to go. If you feel confused of where the markets are going to go, you should not be trading. I usually only trade in the evening if I have a strong opinion of where the daily is trying to go. Like if I can put on a trade and put my stop loss below a daily low or above a daily high without taking on too much risk, I'll basically trade that overnight, but anticipate that I'm swinging that trade. Like I might be swinging that trade for quite a long time. Uh, So the PM session, overnight, we basically just targeted this consolidation here. We have this consolidation that was being built up earlier in the day. It traded lower, right? We got a swing failure here, and then we go run out the liquidity. Yeah, I mean, ideally, you wait for the raids on Asian session highs. It's not always the case, though. Like, if you're just an intraday trader, maybe you just want to trade the hourly time frame, whatever's appearing in the charts when you sit down in front of them. I find my best trades happen in the AM session because usually PM session can be dicey or low volume. But yeah, kind of the way that this is setting up is I do want to see it trade lower. Is that a Korean guy? I'm Chinese, so. You lost your funded account yesterday? Listen, these market conditions are hard to trade in. They're not easy. There's just a lot of uncertainty, right? We have government shutdowns. You have rate cuts that maybe you've already been priced in. And in my opinion, you got dollar going a direction that I don't want to see it go long term. So, what do I do? Try not to trade as much. Try and protect my accounts. Yeah, I don't know. When I look at the intraday time frame right now, it doesn't feel very bullish, right? You have these large markdown periods here, right? And you can have this one leading up to the open. So it could be a lot of people that were along earlier in the week that are trimming their long positions. But if they're all trimming their long positions, that doesn't really leave a whole lot of people to continue buying the market. There's probably only like 1 or 2 good trades this week that I saw, at least. I'm not a low time frame trader, really. Oh. I'm gonna hop off here in 5 minutes, ahead of the open. But I think this is gonna be interesting to watch if this setup does pan out. All right, so if we lose this last hourly high, that short idea goes off the table. But this is part of taking risk, okay? Because I'm gonna usually trade these engulfing candles every single time, as long as the context makes sense. So the thing that's backing this context is that yesterday it closed bearish, right? We look our daily time frame, it closed bearish. It had a hard time closing above that high. And it's Thursday, sorry, it's Friday. So I'm expecting a possible TGIF, maybe down to the previous day's low. If you feel sleepy when you come to the markets, I usually don't trade when I don't get good sleep because I tend to make a lot of mistakes. And Lance Brightstein tweeted this a couple weeks ago. The biggest determining factor in his profitability was his sleep quality the night before. And I can totally attest to that as well. I think sleep quality is something that not a lot of traders look at. Yeah, TGIF is usually reversal on Friday. Like, look at this Friday here. Again, if you're long earlier in the week, let's say you got long on Wednesday, and you held it all the way to Friday, you're giving back a lot of profits. Right? Look at this week. TGIF. Monday, it's trading lower. Tuesday, Wednesday, Thursday. Friday, starts pushing higher. So if you're short in here, let's say you got short Wednesday. And you hold it all the way through Thursday or Friday. Like, imagine how much profits you're giving back. Let's say you got short here, you put your stop loss here, and then your take profit was maybe all the way down here at 3-1. Instead of you taking profits on Thursday at the open, because time of week, right? Or day of week, you decide to continue holding it. You're just going to keep holding it and holding it. And then by the end of Friday, it's all the way back up here. You've given back almost 3R because you're just so greedy and you can't exit the trade when you should exit the trade. All right, so you should always be paying attention to the clock. So have a clock on your desk and always be paying attention to the day of the week if you're going to be an intra-week or short-term trader. Those all have an effect on what you're trying to do. My parents' take on trading when I first started, honestly, my mom wasn't around. And I never really told my dad. So I was really just in it solo. Yeah, Rodrigo helped me out a lot. Performance coach can help you out, but it's still on you to do the work. Because I paid for like Randy Howell's course as well, and I paid for trading composure. I paid for his course as well, but I didn't get any use out of it until I actually sat down and like did the modules and did the work and did the assignments. Right? Started meditating, started doing breath work, started focusing on things that actually matter. Because you can't just expect that I'm going to pay for somebody's, course or mentorship and then just instantly extract value without doing the work necessary, right? That's not how it works. But I'm going to hop off here, guys. I got some things to do. Shooting a pod with Riz later today. So I'll catch all you guys next week. You guys already have my bias on all these markets. Dollar, I'm just kind of waiting on. I don't really know where this market's going to go. I'm not trying to go long here because I already missed it. This was the long opportunity, but it's already hit our extension. Euro could continue pushing lower, but again, that's not really what I want to see. So again, I'm not touching this market either. And NASDAQ, I would like to see this market trade lower today. Along with ES, YM definitely. But YM, I don't know how high this wants to push. If it does want to push higher before it maybe turns around and goes lower. But what I am looking at is this here. So the fact that it doesn't have a lower wick, maybe it wants to push higher, trade to this low here, and then turn around. All right. So that's basically my 2 cents on all these markets. Do I think it's gonna trade lower today? I'd like to see it trade lower. That's just my 2 cents. And if you risk 1R, you just risk 1R. That's it. If you take a loss on the day, there's nothing wrong with ending the day with a 1R loss. All right. It's better to end the day with a 1R loss than end the day with a 3R loss. Or try and go into the market and try and do too much. Right? Because this is all a game of probability. All you're trying to do is take risk reward that makes sense, right? Frame the trades, be disciplined about where you put your stop losses, and be disciplined about where you're getting in and out of the markets and how you're going to manage those trades and your position sizing. All right, that's really all that matters. You can do as much analysis as you want, but at the end of the day, all we're trying to do is make an educated guess of where the market's trying to go. All right, and past that, it's just all trade management, psychology, and position sizing. All right, guys. So I hope you guys have a great weekend, and I'll see you guys all next week.